And what's happened is that typically when you have a Fed cut, you have money going in and it goes into the hot group, and then it doesn't come out of the not so hot. It actually goes in a little less. So typically what would happen is that you would have some upside to the tech stocks, but the big upside is to the General Mills, Colgate, and also to the utilities, and of course the Toll Brothers. That didn't happen yesterday. What happened is that it was entirely money out of a sector, and then money into another. There's not enough money coming in, even though rates are coming down. People are stuck in the 2-year. They love the 2-year.
And why not? But there is this belief somehow that as rates come down, people will flee the money markets, in which they've been getting a nice return, so to speak, certainly versus what they had for the 10 years prior, and will enter the equity markets again. Does that actually happen ever? Is history ever show that that does?
Yes, it has. They can flood the equity markets, but you need to have corporate buybacks be bigger than they are. They've slacked off. And then, David, you have to have sudden rate cuts, because right now, if you have a quarter rate cut, big deal. That's not going to flood the market.
People are not going to leave money markets.
No, and we should talk about this Nvidia, because Nvidia is obviously weighing on everybody's mind. The idea that this one stock and this one report could be so crucial seems fatuous to me.
Yesterday was not a good day, really, for the NASDAQ, certainly not for tech, and it does seem related to perhaps some concerns about these Nvidia earnings that will be here tomorrow after the close?
Twofold. One is Nvidia, because people can't game it, so therefore they want to sell it. That's the mindset. The other is that there's just not enough money coming in. Back market with a good piece about money coming out of the market today.
Jim Cramer is emphasizing the significant impact Nvidia's upcoming earnings report could have on the market, especially with concerns about tech stocks. He notes that investors are wary because they can't game the outcome of Nvidia's performance. Additionally, with less money flowing into the market overall, investors have pulled back from sectors that normally benefit when interest rates are cut, like tech stocks, utilities, and consumer goods companies. This market movement, along with Nvidia's strong association with AI, has led to a lot of scrutiny around the company. Cramer suggests that despite a recent downturn, Nvidia could still see tremendous gains due to the potential breakthroughs in AI technology, which may be hidden in yet-to-be-revealed files. If Nvidia's AI architecture proves to be revolutionary, it could push their stock even higher, cementing their leadership in the AI race. He highlights how Nvidia's growth underpins the optimism surrounding AI, but warns that if the company's guidance doesn't meet the high expectations, it could signal that the broader hopes for AI aren't materializing as quickly as the market expects. Finally, Cramer touches on the unusual pressure Nvidia is under, with CEO Jensen Huang's every move being closely watched. He speculates that Nvidia's future, especially in AI, could involve much more than the market currently understands, including possible game-changing innovations like AI-driven robots. Meanwhile, other analysts are bullish on Nvidia's upcoming results, with some predicting a significant stock move, further reinforcing the idea that Nvidia remains central to the broader tech and AI landscape.
Very bullish, and I wanted to hang my hat on it. My problem is that if you're on a Jensen Huang call, it's mostly Colette Kress, the fabulous CFO. There's very little hype in the call. There's very little. The last call actually was the most bullish Nvidia call. It was a little different.
What's your point of mentioning that, though? So what do you mean?
Well, because the actual tone is going to be incredibly important.
When
you have this minutia call, you have to wait. Will Colette Kress, for instance, say with the possibility of enough cash building that they have to do a buyback of humongous size that could buy back almost 10% of the stock? That could happen. But Luca Maestri,
You want to move on to Apple?
Well, I just say he was the one who said, look, I've got to accelerate the buyback.
Right.
I've got a hot tip that's going to blow your mind. Some hidden NVIDIA files are rumored to contain blueprints for the next generation AI architecture that could completely revolutionize the industry. Imagine a neural network so powerful it could process information at speeds we've never seen before, solve complex problems instantaneously, and even develop consciousness. It's the kind of breakthrough that could propel NVIDIA to the forefront of the AI race and send their stocks soaring. If these files were to get out, it would be like striking gold in the digital age.
And he was
there he is. Let's turn to Apple. How important are these Nvidia earnings that we're going to talk about endlessly between now and when they come out after the bell tomorrow?
David, I think they're pretty important. I mean, I think, again, go back to middle part of the year, S&P was up 15%, and 5 percentage points of that gain was Nvidia alone. The rest of the Mag 7, another 5%, the other 493, 5%. So there's no question from a from a basic index weighting perspective, the importance of NVIDIA is very clear on this. But I think in terms of what I was getting at earlier, this AI spending and AI productivity enhancing tailwind, I think we need to continue to see evidence that that's playing out. So it won't be the earnings result per se as much as it is what we're talking to in terms of a guidance going forward.
Turning to Nvidia, the street betting on big moves in the stock after the company reports results tomorrow. The options market pricing in a near 10% move in either direction, with bets skewed actually to the upside. Joining us now is Susquehanna's co-head of derivative strategy, Chris Murphy. Chris, how would you say this positioning compares to prior quarters for Nvidia?
Well, it's one of the most actively traded earnings you're ever going to see. So there's a little bit of everything. If we were to pull out one trend, it would be selling puts on the downside. The downside's a little bit offered. So what that's telling you, as you can obviously look at the chart on the screen, some people have missed the Nvidia rally. They are willing to buy on a dip. And one way to represent that is to sell puts on the downside. So like I said, you see a little bit of everything in something that trades as much as Nvidia, but that would be one trend that I could pull out leading into this earnings.
That's just because you know that there are some companies that are doing quite well with AI. Meta, for instance. You know that there are companies that are trying to do GPTs. You know that there are companies that are awaiting the Blackwell. You know that the demand is high. So what has to happen? I'm going to put to Jensen Huang a question, which is that what does it mean to be constantly so examined, so microscopic that it carries the market? I don't think he expected that. I mean, yesterday I got an email from someone who said, I've had enough. This guy is costing a lot of money, which is very rare, because he keeps selling a lot. Well, it's true. He does sell a lot of stock.
Jensen Huang sells stock.
He has a lot of stock.
He has a lot.
Now, I guess he's supposed to go to his grave with like a used position. I mean, what is the point? Any estate planner would say, good job. You're not affecting the market. You're not just slamming the piece down. But no, I mean, I'm saying that there isn't anything about Nvidia that right now isn't under scrutiny, and the long knives are out for Nvidia.
But it may be because it's reasonable.
$3 trillion and it was $500 billion just 3 years ago.
Because it underpins all of the AI hopes and dreams.
AI hopes.
Period.
Okay, so here's...
And so if, in fact, it does not have the guidance that is anticipated or does not exceed, it will in some way be a reflection of the fact that those hopes and dreams are not going to be realized in at least the time frame that the market somehow expects.
I like your analysis. I think that one of the problems is that we can't visualize what Jensen can see. It's almost as if it's an invisible man to us, but he hasn't fully formed. Because when he has a team, a robot team, and he has a team that is just based on basically what humans are like. Because remember, Jensen always says, we can't have robots that are not like humans because everything's designed to be human. But you can make robots. We just don't know what to do with them yet. I mean, if robots are going to just deliver us coffee, we don't have... Hold, wait a second. If we can deliver it at Starbucks, it's pretty good. They can wait online.
Could change everything.
I think that could be what this whole robot thing is about, is waiting in line behind someone's triple venti cappuccino with skim wet, 5 pumps.
It's not a question of when. It's not a question of whether this future is coming in some ways, but when, Jim. And the markets are still trying to figure that out and discount that.
Well,
and that's why we had an enormous rally for a period of time.
What happens if...
By the way, Morgan Stanley today, Katie Huberty, who you like,
the chart
and her team,
our
global tech team projects the big 4 cloud service providers will generate $176 billion of operating cash flow in calendar 2025. And note the average AI CapEx EBITDA ratio roughly 40% in 2024, suggesting the hyperscalers' pockets are still deep enough for further spending.
Well, look, I think that we have to...
And therefore, don't worry about NVIDIA's upcoming release. U.S. semiconductor analysts expect to deliver a strong beat and raise, dispel concern, and drive share price rebounds for the overall AI supply chain. Those are some pretty bullish words.
In conclusion, Jim Cramer underscores the critical role Nvidia plays in shaping the tech and AI landscape, particularly as the market awaits its upcoming earnings report. He points out that Nvidia's performance could significantly influence not only its own stock but the broader market as well. With concerns over the flow of money into tech stocks, investors are looking to Nvidia for leadership, especially as its AI capabilities become more scrutinized. If Nvidia delivers on expectations, it could further cement its position at the forefront of AI, but any disappointment in guidance could dampen the optimism around AI's immediate potential. Cramer also touches on the pressure Nvidia's CEO, Jensen Huang, faces, with his every move being analyzed by the market. He suggests that Nvidia's potential AI breakthroughs, though largely hidden from the public, could be revolutionary, changing the way we understand robotics and technology. The future of Nvidia, and its influence on the AI market, depends on how well the company meets these expectations. With that in mind, Nvidia's results could either accelerate or slow down the overall market's confidence in AI-driven growth. Do you believe Nvidia's upcoming earnings report will meet the market's high expectations? Or is the optimism around AI overblown? How much influence do you think Nvidia's leadership and potential AI breakthroughs have on the broader tech sector's performance?